Good morning, ladies and gentlemen. Welcome to the 2020 shareholders meeting for Security National Financial Corporation. By my watch, it is now 10 o'clock, so the hour has arrived. My name is Scott Quist. I am the chairman of the board of the directors, president, chief executive officer of Security National Financial. And being it is now 10 o'clock, I hereby call this annual meeting of the stockholders to order. On behalf of my fellow directors, officers, and employees, it is a pleasure to welcome you to this meeting. And to those who are joining virtually, welcome, and I hope the technology works as first thing. Thane, our chief IT officer, as Thane has assured me, it is going to work. At this time, I'd like to introduce those at the head table. Missing, but I think is someone who I will introduce anyway, is Mr. Norm Wilbur. Norm has been a director for the past 23 years. He is not standing for re-election at this meeting. He has been chairman of the audit committee, the compensation committee, and has been a member of the nominating and corporate governance committee. Again, he's been a director since 1998. Prior to that, he was in charge of J.C. Penney's planning and budgeting. His education included a BS degree, a Bachelor of Science degree in accounting from the University of Utah. Next on my left is Mia B. Love. Mia is no stranger to the company. On a personal basis, we met Mia, I don't know, how long ago was that? That was, I'm looking to Adam.
5 or 6 years ago.
5 or 6 years ago, where she very graciously would come and help us with some of our Memorial Day celebrations at our cemeteries, which are very important activities actually for our death care group. Mia, as many of you know, served 2 terms as the United States Representative for Utah's 4th Congressional District. In that service, she was a member of the House Financial Services Committee, also served on the Terrorism and Illicit Finance Subcommittees, the Monetary Policy and Trade Subcommittee, and the Financial Institution and Consumer Credit Subcommittee. What I really like about Mia is prior to her service in Congress, she served for 10 years. That, I don't know if that shows good judgment or poor judgment, but 10 years on the Saratoga Springs City Council and as mayor of Saratoga Springs. I just don't see any upside to being mayor. but I'm glad people do that. She has a Bachelor of Fine Arts from the University of Hartford and an honorary Doctor of Law also from the University of Hartford. She taught as a fellow at Georgetown University Institute of Politics and is currently a senior fellow for the United States Study Center for Politics in Sydney, Australia. She's a regular political commentator on CNN and is a nominee for election to the board of directors. Next to Mia, to my further left, is Alexandra Mysore, founder and chairperson of Mysore Industries, a multinational conglomerate involved in manufacturing, e-commerce, media, trading, and investments. She started her first company, a digital marketing agency. In my mind, Alexandra is all things digital, and in this age, that's important, becoming increasingly so. Started her first company, a digital marketing agency, at the age of 24. So that was just last year, and subsequently co-founded a social commerce company engaged in accelerating socially and environmentally conscious living. She's the executive producer and host of the Alexandra Mysore Show, which airs on Ruckus, Dash, YouTube, Amazon, Spotify, and several others wherever podcasts are found. She has a Bachelor of Arts degree from the University of California at Berkeley, so she is a Berkeley Bear, sitting next to a USC Trojan. We do have California schools represented, and studied at the Fashion Institute in Design and Merchandising in Los Angeles. Alexandra is also nominated to be elected to the board of directors. Sitting next to Alexandra is, I know who he is.
I don't know, you're being tested right now, we'll see, we'll see.
Tested, I know. This is Mr. Andrew Quist. I've known him
Oh, he passed.
for 41 years. So I've known him for a while. It is out of order on my script, so I was a little wondering whether I was going to follow the script or follow the physical location of people. I think I would follow the physical location of people in their introductions. Andrew has been a director since 2013, a vice president since 2010, general counsel since 2017. Andrew received a Bachelor of Science degree in accounting from Brigham Young University, generally considered to be one of the top 5 schools in accounting in the country, and a Juris Doctor degree from the University of Southern California. Andrew has had responsibilities for life company transactions and further further operational responsibilities for our funeral funding segment or division or business. Next to Mr. Andrew, we have Mr. Jeff Stevens, which is now on the 3rd page, who is the Secretary and Senior General Counsel and is also on the 401k Trustees Committee. He's been the Secretary of the company since 2008, received a Bachelor of Arts degree from the University of Utah and a Juris Doctorate from Brigham Young University. Let's now go to the other side of the room and we'll go to Mr. Craig Moody. Craig, I believe, is our longest serving director other than myself, having served for 26 years. He is the owner of Moody and Associates, which is a property management company and then sometimes a lobbying company. Yes, depending on the time of the year. He's the former Speaker of the Utah House of Representatives and has a Bachelor of Science degree in Political Science from the University of Utah. Next to Craig, we have Mr. Gil Fuller. So there you are, Gil. I found you on my sheet.
Good to be found.
It's good to be found. Gil has been, it's incredible to me that it's been 9 years now. Gil has been a director for 9 years. He's the retired CFO and Executive Vice President of USANA Health Sciences, which, if I'm not mistaken, you still serve as a director and chair of several of their committees. Gil has a Bachelor of Science degree in accounting from the University of Utah and an MBA from the University of Utah. And I think it's fair to say, Gil, that you won't find much Brigham Young University in your pedigree.
That is accurate.
Next to Mr. Fuller, we have Dr. Robert Hunter. He has been a director also for 23 years, the same as Mr. Norm Wilbur. Dr. Hunter is, I really practiced this, and I don't think it's going to work. He's the department of head of otolaryngology. Anyway, ear, nose, and throat, head and neck surgery at Intermountain Medical Center, and the past president of the medical staff of Intermountain Medical Center. He has a degree in microbiology and an MD degree from the University of Utah, although he did spend 3 years, I believe, only two at Brigham Young University. They're not quite as pure as Gil. Next to Dr. Hunter, we have Mr. John Cook. John has been a director now for 8 years. He is the co-owner and operator of Cook Brothers Painting, a contracting firm in Salt Lake City, and attended the University of Utah, and we are glad to have John with us. Next to John is Mr. Jason Overbaugh. Mr. Jason Overbaugh has been a director of the company since 2013, so 8 years. And he is the company's Vice President, National Marketing Director of Security National Life Insurance Company. Position he has occupied since 2006. Mr. Overbaugh has a Bachelor of Science degree in Finance from the University of Utah. Next to Mr. Overbaugh's right is Mr. Adam Quist, who is the Vice President of Memorial Services and Assistant Secretary and General Counsel. Adam has been with the company since 2013.
Yep.
So we're going on 8 years this year. Has been company's General Counsel since 2017 and has had operational responsibilities for the cemetery for our death care segment since 2015 for 6 years. Adam holds a Bachelor of Science and a Master of Science degree in accounting from Brigham Young University, and then a Juris Doctor from University of Utah. Curiously, while he is University of Utah by degrees, he's Brigham Young University by allegiance.
Or at least for the wife.
Looking at Mr. Hunter to see how he. Mr. Adam Quist is nominated for election to the Board of Directors. Next to Mr. Adam Quist, to his right, is Mr. Steve Johnson, who's Vice President of Mortgage Operations from Security National Financial point of view, the President of Security National Mortgage. He's on the 401k Investment Committee and the Non-Qualified Deferred Compensation Plan Investment Committee. Steve has been President of Security National Mortgage for 5 years. I was just trying to think how many years you have been with the company. Is that 21 years? Oh my goodness. So you joined in 2000, so that's an easy, I should be able to remember that.
Me too.
But I won't. Steve has a BS degree in International Relations from Brigham Young University, and if I'm not mistaken, an MBA from Thunderbird University. Other guests, we have Mr. Joel Van Cott. Mr. Joel, if you could stand in case anybody from the audit firm of Deloitte & Touche, anybody who has questions with regards to the numbers, talk to Joel. Thank you. Also, I would like to recognize Mr. Randall Mackey. Oh, there's Randall. Randall has been outside legal counsel since 1987, 4 years. Randall, by far, is the most educated in the room. I don't know whether that's a positive or a negative. You're having a BS degree in economics from Bachelor of Science from the University of Utah, an MBA from Harvard, and then law degrees from both Columbia and Oxford. Thank you, Mr. Mackey. If you could raise your hand, just make sure everyone knows who you are. As chairman of this annual meeting of stockholders, I hereby appoint Richard Dahl, Joe Boyle, and Lori Earl to serve as members on the Attendance and Balloting Committee. And I appoint Mr. Richard Dahl as the chairperson thereof. Richard, if you could raise your hand in case anybody voted in person. If there's anyone here desiring to vote in person, you should have already registered your name and received your ballot. If you have not, please register your ballot at the registration table. I hereby appoint Mr. Jeffrey Stevens to act as the parliamentarian of the meeting. In order to conduct the meeting in an orderly manner, I would ask that all questions from the floor, other than specific questions related to a motion then being considered, be limited to a general question center, which is the general question session that will follow my report. Accordingly, at that time, so that all stockholders may have an opportunity to participate, each individual shareholder will be permitted to ask one question at a time. When the question has been answered, the stockholder who has asked the question must then relinquish the floor to any other stockholder who desires to ask a question. Any questions, however, that are unique to that stockholder, such as the number of shares, insurance coverage, contracts with our death care side, please hold those such individual questions until the period following the meeting. that time, you may direct any such questions to the appropriate officers. At this time, I would like to call upon Mr. Jeffrey Stevens, Secretary of the company, to report to the shareholders on the formal steps taken in connection with the calling of this annual meeting of the stockholders and to present evidence of the giving of the necessary notices.
Thank you. Mr. Chairman, our board of directors adopted a resolution authorizing that the annual meeting of stockholders be held today, June 25, 2001 at 10 o'clock a.m. in Craven, Utah, and to affix the record date for the meeting as of the close of business on April 30, 2021. Representatives from our transfer agent, Zions Bank, are available at this meeting with a listing of all stockholders and their respective addresses. As of the record date of April 30, 2021, there were 16,667,398 votable shares of Class A common stock and 2,574,800 votable shares of Class C common stock, for a total of 19,242,198 votable shares of the company's common stock outstanding. Accordingly, under the bylaws of the company, 9,621,100 shares are a majority of the outstanding common stock and constitute a quorum for this meeting. I have provided a certificate executed as an officer of the company certifying that notice and instructions regarding voting were duly and properly mailed on or before May 20, 2021 to each holder of both Class A and Class C common stock entitled to notice thereof.
Thank you, Mr. Stevens. I would direct the secretary to file a copy of the minutes of this meeting together with a certificate evidencing the service of the notice. The attendance and balloting committee has been asked to make a list of all the stock represented here, either in person or by proxy, and compare that list with a certified list. Will the committee please report? Mr. Dahl.
Mr. Chairman, the Attendance and Balloting Committee reports that shares of both Class A outstanding common stock and Class C outstanding common stock, representing more than majorities of such shares, are present either in person or by proxy.
Thank you, Mr. Dahl. Since a quorum has been established, we will proceed with the business portion to be conducted at this meeting. Anyone wishing to revoke his or her proxy and vote in person, please identify yourself by raising your hand. Seeing none, we will move on. If anyone decides that during the course of the meeting, that they would prefer to vote in person, please indicate, and Mr. Dahl give you a physical vote. Copies of the minutes of last year's annual meeting are available for any stockholder to read. We would entertain questions later in the meeting with respect to those minutes. At this time, the chair will ask for a motion to dispense with the reading of the minutes or either a motion to read the minutes. Your pleasure.
Mr. Chairman, as a stockholder of the company, I move we dispense with reading of the minutes last year.
I second that motion.
I have a motion and a second that we dispense with the reading of the minutes of last year's annual meeting of the stockholders. All in favor signify by saying aye.
Aye.
Opposed, nay. The motion carries. Jeff is always relieved at this point because now he doesn't have to read the minutes.
I don't mind.
It's because you haven't done it.
The chair knows of no old business pending, and accordingly, we will open the floor for new business. Chair will now entertain a motion as to the nominees of the board of directors to be elected at this meeting.
Mr. Chairman, as a stockholder of the company, I nominate the following 10 persons to serve as directors of the company until the next annual meeting, until their successors are elected and qualified. Scott M. Quist, Class A. John L. Cook, Class A. Jason G. Overbaugh, Class A. Mia B. Love, Classes A and C. Alexandra Mysore, Classes A and C. H. Craig Moody, Classes A and C. Gilbert A. Fuller, classes A and C, Robert G. Hunter, classes A and C, S. Andrew Quist, classes A and C, and Andrew G. Quist, classes A. Oh, Adam G. Quist, classes A and C.
Thank you. And I should add, while in order to keep the meeting flowing, because there is a number of items we cover during these meetings, and in the interest of time, we have assigned people to make motions. If others would prefer to make the motions, please feel free. Please feel free. Okay, so we have the following nominees: Scott M. Quist, John L. Cook, Jason G. Overbaugh as Class A directors, which means that they are elected solely by the Class A shares, which are the publicly trading shares. Mia B. Love, Alexandra Mysore, H. Craig Moody, Gilbert A. Fuller, Robert G. Hunter, S. Andrew Quist, Adam G. Quist, be elected by the A and C shareholders. The C stock not being the public stock. Do we have a second to this motion?
Chairman, I second that motion.
Are there any further nominations from the floor? There are none. Chair notes none. Accordingly, we have the nominations of Scott M. Quist, John L. Cook, Jason G. Overbaugh as Class A directors, H. Craig Moody, Mia B. Love, Alexander Mysore, Gilbert A. Fuller, Robert G. Hunter, S. Andrew Quist, and Adam G. Quist as Class A and C directors. The chair will entertain a motion that nominations be closed.
I move that nominations be closed.
I'll second that.
I have a motion. I have a second. It has been moved and seconded that the nominations be closed. All in favor signify by saying aye.
Aye.
All opposed, nay. The motion carries. We'll now vote on the directors. Those of you voting in person, please mark your ballots. Those who have voted by proxy, I believe those ballots have already been counted. Proposal number 2 on the proxy. The chair will now entertain a motion to approve on an advisory basis the compensation paid to the company's named executive officers.
Mr. Chairman, I make the motion, compensation paid to the company's named executive officers be approved on an advisory basis.
I second that motion.
I have a motion. I have a second. That the compensation paid to the company's named executive officers be approved on an advisory basis. We will now vote. Are there any who desire to vote in person? Seeing none, we will move to proposal number 3. Chair will now entertain a motion to ratify the appointment of Deloitte & Touche LLP as the company's independent registered public accountants for the fiscal year ended December 31st, 2021.
Mr. Chairman, I make a motion to ratify the appointment of Deloitte & Touche LLP as the company's independent registered public accountants for the fiscal year ended December 31st, 2021.
I second that motion.
I have a motion. I have a second. That the appointment of Deloitte & Touche LLP as the company's independent registered public accountants for the fiscal year ended December 31st, 2021 be ratified. We will now vote. Are there any desiring to vote in person? Thank you. We will now move to the report session of the meeting. We'll go to, this will be the order. We'll have a report by Mr. Garrett Still, who is our Chief Financial Officer. Following Garrett will be Mr. Jason Overbaugh, which will give a report on our life segment. Following Mr. Jason, we will have a report from Mr. Andrew Quist regarding the company's investment strategies, which is a somewhat, it's a critical topic and it's a somewhat nuanced topic. So pay close attention. The reason it's a little nuanced is because you have different types of investments that you can make depending on who's making the investment. If they're investments made by the insurance companies, for example, they have to comply with statutory requirements. Whereas you have greater freedom death care segment or cemetery mortgage, or our mortgage segment. But we'll look forward to that report from Mr. Andrew Quist. Following Mr. Andrew Quist, we will have a report. Well, we'll go to that point. Let's go. So with that, Mr. Garrett Sill.
Thank you, Mr. Chairman. It's good to be with everyone today. For my presentation today, I just want to really break my few minutes that I have into 4 categories. First, I'd like to recap 2020, then talk a little bit about Q1 2021, talk about our stock movement, and then end up with my favorite topic, current accounting guidance that will have an impact on the company in the future. So let's start off with 2020. 2020 was the best year that the company has ever had. We had a 400% increase in revenues. And this was the first year, if you recall back in 2019, in December, we acquired Kilpatrick Life Insurance Company. 2020 was the first year of full earnings for that acquisition. So added to our increase in revenues. Skipping back to our net earnings. So I guess I missed a slide. Mine are out of order. But so net earnings actually increased by 400%, and revenues increased by 7%. For the 400% increase for the company, $56 million in net earnings was by far the greatest year we've had. If you look at just this chart real quick, 2018 was our next best year in the company, and the results of 2018, or if you recall, was really the result of a sale of a single asset that Security National Life held. And so from an operational perspective, 2020 was just a phenomenal year for the company. When we look at our earnings by segment, as I mentioned earlier, 2018 here for those in the room, but I'm looking at the 2018 light blue bar for those that are online. That represents our life segment. That is that sale of that asset. But if you normalize 2018 and you look at 2017, 2018 normalized 2019, and now 2020, all the segments showed increased profit year over year over year, with our largest profit being in 2020 from the Security National Mortgage Division, which is responsible for our origination of our mortgage company loans. It should be noted, as I mentioned earlier, that in 2019 we had 1 year or 1 month worth of operating results from Kilpatrick Life, our acquisition. That 1 month resulted in a loss in 2019 of approximately $820,000. In 2020, the net gain on a GAAP basis of Security National for Kilpatrick Life Insurance is actually $1.3 million for the entire year. So just in a 13-month term, Kilpatrick Life turned an extra $2.1 million in net income to Security National Financial Corporation. So we're very, very pleased with the results of that acquisition. So what are the end results then of where we're at with that incredible year that we had in 2020? Well, equity has increased. Stockholders' equity increased over the year by 77%. So that represents about $115 million increase since 2017. We're very, very pleased with that. That shows that, if you remember, our net income for 2020 was about $56 million. Over the last 5 years, we've increased stockholders' equity by $115 million. Our assets have grown $567 million over that same period. Part of that, it was a result of the acquisition of Kilpatrick Life. We added about a little over $200 million in assets at the end of 2019, but through the mortgage companies, mortgage loan originations, and the other company divisions results, we're able to increase an extra $367 million in assets. When we look at these assets, as Scott alluded to a little earlier, the investment of the company's assets becomes very, very complex and very, very important. Andrew's going to jump into this a little bit further, but just a couple of things that I want to point out. The difference between 808 million in 2017 to 1.3 billion is a big difference of assets that need to be invested. And 2020 was not the best market to try and invest assets, but because of the mortgage division and mortgage loans taking off in the market, we're able to find a home for a lot of those invested assets. That's shown here on the light blue pie chart from 17. We had about 17% of our assets in 2017 invested in mortgage loans that were held for sale. That is pretty much what Security National Mortgage does. They originate loans, hold them for sale, and then sells them on the secondary market. We fast forward to 2020, we're at this 32% in that light blue grid. Now, that looks like that percentage just merely doubled, but that number is much bigger than that. 17% of 808 million is about 140 million in assets. 32% of 1.3 billion is a little over 400 million. And so that asset class between 17 to 2020 is where we saw the majority of our increase in assets was in not just loans held for sale, but also mortgage loans. Skipping forward then to first quarter earnings, and go back a slide. First quarter ended up being a phenomenal first quarter for us as well. I've already alluded to earlier that 2018 had really an outlier. The first quarter of 2018 is when Security National Life sold our Dry Creek Apartments that was responsible for the majority of the, if not all, of our first quarter earnings. So if you normalized it and you kind of looked at going forward where we're at in 2021 for the first quarter, a $12.13 million net income number was just phenomenal. It ended up being our second best first quarter in the history of the company. But if we took out the Dry Creek sale of assets in 2018, it would by far be our best first quarter net income earnings. What did assets look like for the first quarter? Looking at that same pie chart, we did lose a little bit in assets. Our loans held for sale, which the mortgage company generates for sale to third parties, dropped to 25% instead of 32%. So they were down a little bit, but we still remain fairly invested with not too big of a grade of a concentration in any one asset through the first quarter as well. And we're happy with that. I want to talk just a little bit about the stock price because it's been an interesting year here, and I put some key dates. This chart is a look back at our stock from 2019 to today. Just a couple highlights. Start of the pandemic, our stock was not immune to the pandemic having an impact on the stock market. We, like everyone else, saw a significant decrease in the value of our stock beginning in March through kind of the end results of our first quarter. We received notification and that we were actually going to be included in the Russell 2000. And I'll talk a little bit about the Russell 2000 in just a little bit, but that's an index. But with our inclusion in the Russell 2000, that was kind of determined that would happen in March. So between March and April, we saw a huge increase in our stock price as indexes and funds that belong to that index were beginning to buy our company stocks. We saw a nice increase because of our inclusion in the Russell 2000. After that initial inclusion, we did see a little bit of a drop off as not as much stock was being bought. But then we posted a very nice, strong second quarter, followed by another strong third quarter, and we saw our stock price continue to increase, culminating with a very, very, as I mentioned earlier, a tremendous year-end results. Unfortunately, in about the same time, as we were posting our year-end results, we received notification that we were going to be dropped from the Russell 2000. And we have seen since that notification a continual decrease in the stock price. But if we look at it from year over year, comparing to the Dow Jones, the Dow Jones is this light blue line here. The S&P, Dow Jones is the purple line, and the S&P is this light blue line. Looking at a 18-month look at our history of our stock is still up 50% from where it was at 2019. The Dow Jones is at, the S&P 500 at 37%, and the Dow Jones at 23%. So we have outperformed over the last 18 months both those indexes. Real quick on the Russell 2000. So we were benefactors in March of 2020 being included simply because the stock market crashed. How you're included in the Russell 2000 is really, there's just a line drawn in the sand. If your market cap, which is your stock price times by the number of shares you have outstanding, if it's above a certain line, then you're in. If it's below, you're out. You'll notice where the line was drawn in 2020, it was 94 million. That is the lowest it's been since the Great Recession in 2009. We came in at about 106 million was our market cap, so we were included. If you fast forward to where it is now, that line was drawn in the sand this year at 257 million. Our market cap as of today was about 165 million, maybe just a little under 170 million, depending on which day you look at the stock. Any other year at 170 million, with the exception of one, we would have still been included in the Russell 2000. So it's unfortunate that we were dropped, but we kind of look at this as maybe an anomaly, and we'll kind of monitor that, look forward to potential inclusion in later years. Real quick then, this is just to look at the same stock price, but not an 18-month look back, but just a 6-month look back at where we're at now. As I mentioned earlier, strong year end as the stock got built up, and then really the decrease shows the results of the Russell 2000 being excluded. In fact, yesterday we had more stock traded than at any point in our year, as those indexes are rebalancing today and tomorrow, or sorry, yesterday and today is kind of when that rebalancing takes place. When I looked this morning, we were actually up, so that's a good thing. Just finishing up then real quick, as I mentioned, a couple of accounting guidances that are coming up. I know these are way down the road, but something to look at. I don't anticipate any of these new guidances having an impact on any of the financials. It will really just be in the disclosures. This last one here, this 944, that's really going to target our life reserves. If your review of our financial statements right now, we report our life reserves in one just big lump sum number. That's going to change in 2025. We'll break out that number in the disclosures quite a bit to allow the readers, not only the readers and investors, but our shareholders, to understand a little bit more of the ins and outs of how our life reserves are calculated and what their grouping is. So that concludes my report, Mr. Chairman.
Good morning. It's wonderful to be here with you. Not to belabor some of the points that Garrett just made, but in 2020, our life companies, this was our second best year ever, second only to 2018, as noted in that single asset sell. Our earnings were up 82% to $11.9 million. Now, we operate our company in really three different, three separate active life companies. You can see that all contributed positively last year. And focusing on Security National Life and First Guarantee Life, earning drivers were First Investment Income was up 9.5%. Now, some might think that's just the mortgage activity and those investments that drove that, which was a big part and an important part. But other investments we had in our commercial lending, our real estate activities, our investments in fast funding were all drivers in pushing that revenue upward, which helped the company tremendously. Renewal premiums collected were up 5% last year in these two companies. Now, some of our inhibitors in 2020 were COVID-19 death claims, and we'll talk a little bit more about that as my presentation goes on, but death claims were up about 40% last year. And first-year sales decreased about 9.5%. And again, more on that topic in a second. Discussing Kilpatrick just a little bit further. Garrett mentioned that we closed on Kilpatrick Life Insurance Company in 2019. And in the first quarter of 2020, that company experienced a loss of nearly $1.5 million. Now, during the pandemic, we had to shift the investment strategies, and I mentioned what some of those were, but also we had to rationalize a lot of costs within that organization. And so investment income in Kilpatrick went up about 74% comparing its previous experience, and costs went down 36%. And those were some big levers to pull that eventually turned the company to a $1.4 million profit in 2020, and much of that had to be done during the pandemic. And so I do have to give a nod to our sales director down there, Jason Richardson, and our operations manager, Anita Amos, for a job well done in turning that company and rationalizing those costs. It should be noted that Kilpatrick also was the benefactor of significant COVID claims, being up about 35% in death claims. And before I go on to my next slide, I do need to give a thanks to our exceptional staff in our life companies. You know, going into the pandemic, we were an organization where we were 100% in the office, and pivoting to remote working in a matter of days, I think showed exceptional leadership by our operations team and our technology team in making that possible and for us to operate so well in 2020. So thank you. Now, focusing on sales results in 2020, you can see we were down 9.6% from about $35.4 million in annualized premium to $32 million in annualized premium. Something that needs to be understood about our sales organization is that we are an in-home sales group filled with independent sales agents. And you think about those two elements of the sales organization, neither one is conducive during a pandemic. You know, in other words, it's hard to go into people's homes and sell during a pandemic, and then trying to turn independent sales agents, salespersons to new techniques and technologies of socially distanced telesales and DocuSign and those types of things was not an easy feat. And I have to say, I'm quite proud of how our group responded in a matter of days, going from in-home sales to being able to do telephone sales, and like I mentioned, DocuSign sales, where you would just pass documents via email, was an exceptional accomplishment. And I have to give a nod. You'll note on the chart that our home service group was actually up 11.5%, which is their second best year ever, because of utilizing and embracing a lot of these new sales techniques. And I guess to further highlight my enthusiasm for what we accomplished in 2020, at one point during the pandemic, we were down more than 20%. And to fight our way back to being down just 9.5% or 9.6%, I think is a job well done by our sales organization, our leadership, and our operations group. So thank you. Now, focusing on COVID-19 death claims. As I mentioned, claims last year were up about 40%. And we are a simplified underwriting insurance company. And our typical policyholders are those who were most impacted by COVID-19. Now, this point was quite evident in these death claim numbers. And so by the numbers, you'll note on the chart that we had 1,624 COVID-related claims, which resulted in us paying out $5.6 million in death benefits. You'll note on the left of the chart, this is a month-by-month tracking starting in April going to December. This top number, you'll note in April, we had 131 claims, COVID-related claims, that represented 9% of the total population of claims within our organization. And you can see this carried through to December, where we had 290 claims in December, and that represented 17% of our total population of claims. And you can see that trend line there, it really tracked what you saw in the press about deaths in the United States and what was occurring. And I guess in total, one of the most important numbers for the company's perspective is this $2.5 million. That's the amount that the company paid out, that came out of the company net of reserves. That really was the cost of COVID-19 in 2020 to our life companies. Now, focusing on there we go. Looking at first quarter 2020 and staying on the theme of COVID, you'll note that in January of 2021, we had 388 claims, which was a high watermark of 23% of our total claim population occurring in that month. And luckily, or I shouldn't say luckily, fortunately, as people have chosen to make the wise choice to become vaccinated, we've seen this trend going down in COVID claims. And this has been a continual theme for us at Security National, and one that we're grateful for. I do view COVID as an important part of changing how we underwrite and assess risk in our organization. I do view it as something that I think we have a good handle on, and that moving forward, we'll integrate the effects of it into our organization, and we'll become better because of it. Now, I won't belabor this point too much. Garrett talked about some of our first quarter. You can see that as life companies, we are up in the first quarter, in large part because of increased investment activities and results there. Collected premiums were up 5% in the first quarter, and our expenses, G&A in the life company, was down 7% in Q1. It is noted, and you saw that in that January COVID death claim number, that claims were up 37% in the first quarter. But again, that has been trending down since that point, and that's good news. My final slide is our sales results in first quarter. And you can see that we have rebounded quite well, being up nearly 14% in Q1. And it should be noted that when we're comparing year over year, Q1 of 2020 was largely not impacted by COVID, whereas Q1 2021 was. And to have these types of results and this type of momentum moving forward, I'm quite proud of our sales organization and what they're doing to drive our work forward. But with that, that is my report, Mr. Chairman. Thank you very much for your time.
Well, good morning. It is very nice to be here in person with many of you, and to have those of you joining online virtually as well. As Scott mentioned, I hope you're all paying very close attention to what I have to say. That means no falling asleep back there, Thane. Keep the eyes open. Today is a really significant day, and it's very nice to be reporting to the shareholders of Security National on our activities of the past year. And since it's such a significant day, I actually used beard oil and beard butter
this morning. So hopefully it's looking very shiny and radiant even online. But that just shows you the significance of the shareholders meeting today. As Scott mentioned, I'm going to be talking about our investment strategies. I struggled a little bit on what to title this, but really investment strategies or investment philosophies of Security National. And I was having a conversation with a shareholder of ours that made the comment that they viewed Security National somewhat as a mini venture capital fund or a mini private equity fund. And in certain ways, that's an accurate description. That can be a very accurate description of our company. As Jason just reported, the life insurance company collects dollars in the form of premiums, and we have to invest those premiums at a rate where we can pay out those death claims and make a profit. Now, that's not to say that we solely rely on investment spread for our results. We have margin in all of our products, be it life insurance policies, be it mortgage banking, be it cemetery and mortuary. But the investment spread on our investments is a significant part of Security National's performance. So with that, there's a couple of foundational ideas that we should touch on. There we go. When talking about investments. And the first of those is the structure of life-based assets or non-life-based assets. So assets that are under the umbrella of the life insurance company or assets that are outside that umbrella. So in general, life insurance-based assets are statutorily regulated. That's by the Utah Insurance Department. Security National Life is a Utah domestic insurance company. And that means that there are highly defined and prescribed categories that we can invest those dollars in. It goes to percentages that you can invest in. It goes to asset classes that you can invest in. And it's very regimented. And we go by those statutes. And so we have to fit within those guidelines if it's a life insurance-based investment. The other thing to note is those investments, when they're made, can also impact our statutory capital. Statutory capital is how our regulator, the Utah Insurance Department, monitors how healthy Security National Life Insurance Company is. And an investment can have a hit to our capital just based on the type of investment it is. Whether it works out or it doesn't work out, it can impact our statutory capital. So that's something to keep in mind as well when we're talking about life insurance-based investments. The other broad category is non-life insurance-based investments. Generally, these are much more lightly regulated. I put other in quotes up there. Governmental agencies or third parties can have a say in what we invest in and what we don't. But for the most part, we have much more latitude in investing those assets. But we have far fewer assets available that are outside the life insurance company. And for those distinctions, just to give you an idea, in the 10K, we had about $1.1 billion of assets that were attributed to the life insurance company, about 400 million attributed to the mortgage company, and about 60 million attributed to cemeteries and mortuaries. There we go. Another aspect of our investments that should be thought about is returns, obviously. And what I mean by that is our life insurance reserves, okay, when we collect premiums, most of them go into a reserve that is the funds to pay out the future death benefits, right? Now, those reserves have a tabular interest rate associated with them. And what that is basically the expected reserve growth on those dollars. It's the implicit investment rate, as it were, for those reserves, what they have to grow to pay out those death benefits in the future. Now, for Security National, that tabular interest rate is basically around 3.75%, 3.8%. Now that's a fixed the fixed rate, and actuarially it's calculated, and that's what the reserves have to grow at to pay out those death benefits in the future. So I just want to highlight this point again. That's the rate that the reserves have to grow to pay those death benefits in the future. That does not include administrative costs. That doesn't include overhead. That doesn't include marketing. It doesn't include all of those costs. So that 3.8 is kind of our baseline. Now, the chart that I have on the screen here and online is basically NAIC 2 10-year index. And what that basically means is these are basically BBB rated bonds, 10-year BBB rated bonds, and their average rate. This was as of last week, and it's a little small for those of you in the room, but that average rate was 2.55%. And this chart's a 5-year look back. You can see it's up and down, but over here on the side, 2.55%. So you can see that if we just invest in corporate security, this isn't even treasuries, right? Everyone knows the 10-year right now is below 1.5. But in corporate securities, if you just invest in corporate securities right now, we're going to be underwater on our return that we need to make for our reserves by 1.25%. So it's not something we're going to do, and not something we can do as a company to say, hey, we're just going to invest in passive bonds as an investment strategy. It just doesn't work. And that's a challenge that a lot of financial institutions are facing today, is where to get yield on investments. Now, you have to pair with this the insurance statutes dictate that a certain percent of your investments are going to be in bonds, just the way they're set up. And so that sets up a challenge, right? Where part of your assets are going to have to be invested in bonds. But right now, your investment grade BBB corporate bonds are giving you 2.5%. So what does that mean? Well, that means that we have to be active in our investment management. And I think this is something that Security National is actually pretty good at, and something we've worked hard at over the past decade is, hey, we can't be passive investors. We can't just sit back and invest in the market like that. We have to be active in generating those returns we need to be successful. And so today, I just want to cover 4 of these active investments that we're invested in. And I would mention here that we have other investments. Some are large as well. I would mention construction lending, vertical construction lending for single family homes. We probably have $95 million invested in construction loans right now. So that's a big segment. Commercial lending is also a big segment for us. That's been covered in past shareholder meetings, those activities there. So those are both big activities. But the 4 I want to focus on today, and these each represent between 3 and 9% of total assets of Security National. So they're sizable chunks, are our Center 53 office park, life insurance assignments, land acquisition, development and builder relationships, and mortgage servicing rights. And I would also highlight, although my presentation isn't geared around inflation, many of these asset classes are asset classes that we think have upside in an inflationary environment. So that's certainly a topic of the day, and one that we are concerned about and looking at how to navigate. I'll mention certain aspects of these investments that help in an inflationary environment. So the first of our active investments is commercial real estate development. For those of you in the Salt Lake Valley, hopefully you've seen our Center 53 office park located right off of 53rd South. Building 1 is completed and 97% occupied. Building 2, this one for those of you in the room, right here, is 100% occupied and will be completed in September. And so between the two buildings, we're almost 99% leased on over 400,000 feet of office space, which to do that through the past year in COVID and the work from home environment, I think is a significant accomplishment of the Security National team to have that type of success in this market. Now, the cost, just to give you an idea, the cost of building 1 was 63 million. The cost of building 2 is 72 million. And, you know, that represents $135 million of our asset base. So these are significant assets of Security National here. Now, how does this help in the environment we may be going into? You know, both of these buildings right now, I would not hazard a guess, but I do know that both of these buildings right now, if you were to start these buildings, could not be built for those costs right now. The replacement cost on these buildings is significantly higher than what we just built them for. And if you believe in inflation, that's only going to continue. That's only going to continue and increase. So we have a physical asset that you're not going to be able to replace at the cost we have it on our balance sheet in the future. Also, we've gotten some very significant credit-worthy tenants to sign long-term leases. You've seen the press releases, R1, Finicity, who was acquired by MasterCard, SoFi. We have very good quality tenants in these buildings, so that's good. The aspect that I would make everyone aware of is, you know, you sign these leases for long periods, 7 years, 10-year period. We'll see how inflation goes. That can either be a good bet or a bad bet, right? If inflation is outpacing the rent escalations, that can be a problem. But we view it as better to get a tenant in our buildings for a long period and get that stabilized, and then deal with the risk of maybe, I won't call it super inflation, but higher inflation that we've seen over the past 30 years impacting those lease rates. Lastly, I just have this slide up here, the blue barred building, and since everyone's kind of seen the buildings off of the freeway or seen other renderings of them, this is actually a rendering for our potential third building at the site. And as I said, being almost 99% leased at the first two buildings, we've seen significant interest in another building at the site. And when we have enough pre-leasing activity, we will be starting on a third building. And I will say this right now, this one would be larger than the first two buildings there. Our next activity is life insurance assignments. So life insurance assignments are fast funding. You've heard mention of that a little bit in today's reports. That's done under our C&J Financial brand or fast funding brands. This business, just to explain it briefly, is the insurance policies that the life insurance company sells, and I mean that type of policy, a final expense or a pre-need, a policy used to fund one's funeral expenses, gets taken to a funeral home. And the customer says, here, I want my funeral for this life insurance policy. And the funeral home says, that's great. You know, don't want to turn away a customer. Fantastic. I'll take your policy. What the funeral home doesn't like about that is they don't have dollars in their hands at that point, right? They have a life insurance policy that they then have to go and file with the insurance company to get paid on that. And that can take them 60, 90 days to get their money. A lot of funeral home establishments can't wait that long to get their money. So they assign that policy to fast funding for roughly a 4% fee. We advance. Look at that jet right there. Doesn't that money look fast? We advance 96% of that life insurance policy to the funeral home. And then at fast funding, we then go to the insurance company to collect the full value of that policy. And so that's how we make our money in this industry, is through that discount rate, that 4% discount rate. Now that's a gross rate, right? That doesn't account for any losses that we have on the policies. That doesn't account for all the labor involved in doing this process. But that is something that we spend a lot of time and have a good office in Alabama and South Carolina working on for us quite frequently and constantly. So we do this a lot. The margins on this product are very small. We're talking about very, very small dollar amounts that we make on each one of these, but it's a very high volume business. We will do these transactions. Last year in 2020, we took over 56,000 assignments. And so it's a high volume, high transaction, small dollar amount business. And we will have anywhere between, it depends on the time of year, but anywhere between $45 and $65 million invested in those activities. Next slide is something that really has become more prominent for us over the past 5 years, and that is land acquisition, development, and home builder relations. And I know there's many virtually that are maybe not in the Salt Lake market. For those of you that are in the Salt Lake market, I just put up a little recent headline out of a local newspaper here that median single-family home prices in Salt Lake County just this past May just crossed $535,000, which is a crazy amount. And as the headline up here says, that's a $128,000 increase over May of 2020, a 31% increase in housing prices, which is, it's unbelievable. Now, Alexandra is coming from California, and the headline here is we're headed to California prices, not quite California prices yet, but it is, for Salt Lake, these are eye-catching numbers. In the same article, they mentioned that it's estimated that the Wasatch Front is short 45,000 to 50,000 housing units, which is an unbelievable number. And the statistic, I'm going to give you one more number here that I just found amazing to give you an idea of the market here for single-family homes. During the height of the Great Recession, so we're talking about 2008, 2009, and the aftermath of that, there were 18,000 listings during the height of that downturn at the height. So at any one time, there was 18,000 properties listed for sale. 2 weeks ago in Salt Lake County, that was for Salt Lake County, 2 weeks ago, there were 632. And if you think about the population that we've had, the population increase that we've had, the number of people moving here for jobs, and to have 632 homes listed for sale in the county when about 13, 14 years ago, there was 18,000. It's incredible, absolutely incredible. All that to be said is why we think it is a good time to be expanding our land acquisition and our development activities at Security National. Coupled with that, again, just subtly in my topic, inflation. If we believe inflation is going to continue into the future, single-family home lots are going to be a place that is less impacted by inflation. But all told, Security National, now this goes across, I'm going to use kind of a blanket statement here, but this would cover land that is just raw land, is not entitled. This would cover land that has all the improvements in, and this would cover land that is like platted, all improvements in, and ready to sell the next day. So, I mean, we're covering a broad spectrum of land types. And this would also include, we hold the land in several different ways. Some we just own outright. Security National would just own these lots outright. Some lots we would be lenders on the acquisition of those loans and lenders on the development of those lots. Sorry, lots, not loans. But all total, Security National has about 1,400 single-family lots on our balance sheet. That's a lot. that's something that we have strategically rotated into. But as I was talking at the beginning of my comments on this section, the demand right now just seems to be unending. And we feel like it's a very good place to be. In addition to just the investment aspect of our land acquisition and development, it's also a wonderful lead source for our mortgage company, right? These acquisitions feed into our construction lending. These acquisitions then feed into our long-term lending at Security National Mortgage. So really, it's a sweet spot investment for us in that, one, we have a very robust real estate market here in Utah at this time. It's an asset class that we think does better at protecting us in an inflationary environment. And it also is a lead generation product for our mortgage company. So there's a lot to like about this asset class. Last that I want to talk about, and something that Steve might touch on, Steve Johnson in his comments as well, is mortgage servicing rights. Mortgage servicing rights at the very fundamental level is in your mortgage rate, there's about 25 basis points given to the servicing of that loan. And those servicing rights can be sold separate and independent of the underlying mortgage loan. Now, a decision has to be made at Security National Mortgage at the time of selling one of our loans as to whether we, as Security National Mortgage, are going to retain the servicing, retain that 25 basis points on the loan, or whether we're going to sell it released. And that just means get paid up front for that servicing stream. Sometimes this decision is easy. During the height of the pandemic recession meltdown, our counterparties were paying zero for those servicing rights. They just would not bid on those servicing rights. Pretty easy decision in that environment, right? When someone's not going to pay you anything and you can get 25 basis points on the unpaid principal balance of the loan for the life of that loan, that's a pretty easy. Steve did that one over and over and over again. Other times, people will be paying upwards of 4 multiples of these servicing rights. And at that point, you have to say, okay, how long do we expect this loan to be on our books? And is it worth it? So you make a decision based on that. In 2020, 67% of our loans that we originated, we retained servicing on. So 2/3 of our loans, we decided to retain servicing on those. And they had, at the end of Q1, our loans had an average life expectancy of 6.7 years. And so what that means is, hey, when we originate this loan, we expect it's going to be serviced on our books for 6.7 years of a 30-year term. That's when we either think it's going to be refinanced, the person's going to sell, and then we lose that income stream. Now, in a rising interest rate environment, theoretically, mortgage servicing rights become much, much, much more valuable, right? Because if I've got a 3% loan and we're in a 6% rate environment, people are going to be very hesitant to either sell, move to a new home, or to the refinance options are certainly not going to be there in that environment. So what that means is the average life, you would expect the average life of those loans to extend out. And now where you've priced that MSR at, hey, we only expected it to be on our books for 6 years, now maybe that goes for 10 years, maybe that goes for 12 years. And the value of that mortgage servicing right increases. So we view mortgage servicing rights as another really nice hedge for an inflationary or rising interest rate environment. Certainly our bond portfolio will be impacted very negatively in a rising interest rate environment. Mortgage servicing rights, on the other hand, should be a very nice counterweight to that movement. And as of our 10Q, the carrying value of these mortgage servicing rights was $43 million on our books with a fair value of $55 million. So again, significant assets that we have on our balance sheet. That is it for my presentation. But the last slide just says thank you, but that's fine. But again, I just want to reiterate that this is a challenging environment for investments. And we have to, at Security National, again, take a very active role in making sure that we get the returns we need to be successful at Security National. And I hope for those of you online and in person in the room, maybe have a little bit better understanding of what some of those key activities are that improve our returns. So with that, thank you very much. And the slide says it now. So thank you.
Thank you, Mr. Andrews. Next, we have three more reports. One will ask Mr. Thane Atkinson. He's going to report briefly on our investor website, which some, I don't know how many attendees we have virtually, but hopefully we have a portion of our investment community. Mr. Thane, if you could come and report, and then Mr. Adam Quist will be reporting on our desk care companies, and then Mr. Steve Johnson, if you could follow up on our mortgage side.
Thank you. It's a privilege to be here and to report on where we are heading with our corporate website and our the investor functionality on our corporate website. We have had a project happening for the last couple of weeks, and Andrew brought to my attention that this past Monday that we had some in our investor community that weren't happy with our website and some of the functionality there, and we already had a project underway. So I'm happy to kind of show where that is heading. We are looking at branding ourselves and showing the strength and depth and breadth of our company, and then making certain things of our company easy to access. So this is a proposed homepage or part of the homepage that we are heading to. You will see here that we have stock ticker information kind of up here in the top right. Very easy to get to press releases and investor relations from this page. Clicking on the stock ticker, perhaps, there we go. We'll just show some more in-depth information on our stock. We have also, just through the menuing system, showing various information that we can get to from an investor perspective. And then moving along, just showing who we are as a company, not only to our investor community, but to our employees or potential employees, outlining who we are, what we represent, the values that we represent, and just kind of every place that we touch in the community and in the lives of those that we interact with. Just a couple of more pages here. Again, just another little link to our investor page. And then just to talk about our investor relations, we've partnered with a company called Intrado. They are a leader in the industry on building investor relation websites and investor functionality. There are a number of SEC requirements that we need to meet on our website when we put investor information out there. And Intrado, again, as a leader, meets those. We'll have things such as dynamic SEC filings, so that when we file various 10Ks and 10Qs, those are automatically fed to our site. Our key financials will be readily found on the site with some interactive tools that you can interact with those financials. There's, of course, a governance library. This is part of the SEC compliance aspect that will list all the governance documents and profiles that are needed to be out there. We have the potential, we're looking at an interactive annual report that you can interact with via the site, as well as capturing events and presentations. So things like the annual shareholders meeting that we're in now can be recorded. All the presentations will be captured and can be held on that site for others to look at in the future. And that sums up the direction that we are heading with the corporate website. Our anticipated launch date is about 8 weeks from today, which I was reminded yesterday corresponds just about in time for us moving into our new building. So I think that will be just great timing for launching that website and then showing the world really who Security National is and our family of companies and the debt that we represent. And Mr. Chairman, with that, that is my report. Thank you.
Thank you, Mr. Fink.
Well, good morning. While they're bringing the presentation up, I just want to say it's a pleasure to be here today and have the opportunity to report on the company that we own collectively together, and specifically on our death care segment or memorial services. I will acknowledge at the out front, it is a little bit awkward today to present on the financial results of our company in light of the pandemic and COVID-19. We are certainly aware of the troubles and the losses that many have experienced as a result of that, and we certainly don't minimize any of those struggles or the pain that has been caused by that pandemic. But nevertheless, it is a great opportunity to be able to present today. I will be reporting on just the financial operational results for Memorial. If you're comparing them to our public statements, we do house some real estate holdings on there, and there are also some mark-to-market gains that are recognized for financial purposes, for public reporting purposes, but that I disregard in terms of our operational performance. So, my focus for this presentation is truly just on how we're operating as a company. So I will start by don't know if the clicker's working.
Sometimes it sticks.
Here we go. I will start by talking about our 2020 financial results. 2020 was a fantastic year for the Cemetery and Mortuary Company. We came in at the end of the year generating about $4.6 million of net income. And that was our best year ever, by far. Our prior best was 2019, where we made $2.6 million. So we had about $2 million over and above our second best year. That represented a lot of work on our staff and on our management side. First, I'd just like to point out on our funeral homes, you'll see on the top here, we generated $1.4 million of net income. To put that in perspective, the funeral homes had never made more than $1 million in a single year. Our Utah cemeteries came in at 2.3. Their previous high was about 1.2. Seeing Hills came in at $470,000. For those who are not as familiar with our locations as others, Seeing Hills is our cemetery in San Diego. We earned $470,000 net income. Their previous high was $350,000. The sole drag on our earnings was our investments. We generated $420,000 of net income compared to just under $700,000. So we were down about $270,000 of investments. The main reason for that, as Andrew kind of highlighted, is we do a lot of A&D investment. Just by their nature, those gains tend to kind of take years to generate. And so in 2019, we did have a subdivision that we were able to both realize and recognize a gain on. In 2020, we did not, but we currently have about $12 million of Memorial's assets outstanding in A&D or construction loans that we do anticipate will continue to generate strong investment returns for our company. But again, 2020 was a fantastic year for Memorial Mortuaries and Cemeteries, and something I think we should be very proud of. Personally, I am very proud to be associated with our staff and our management. Throughout the pandemic, we heard a lot about first responders. We heard less about the last responders, but I think that they play just as pivotal role in the pandemic, and were there for families. And when you think back, come March, April, May, when a lot less was known about COVID-19, these funeral directors and our staff were still out there in the day-to-day working with these families when they were experiencing what is generally one of the worst days of their lives. So my hat is really off to our staff and their performance throughout the pandemic. If you could advance the slide, the clicker's still not working. Thank you. This is the same information, but just over our historical trend since 2014 when I joined Memorial. I wanted to point out just that every single operating segment had their best year ever. And you can see how far we've come from 2014. The other thing I wanted to point out was that over the last 7 years, we've averaged a 27% compounded annual growth rate in net income. So while 2020 was certainly a year that was unique in terms of the challenges and opportunities presented by COVID-19, I don't want it to be lost that our staff and our management has made a lot of great operational improvements that also contributed to these results in 2020. If you can go to the next slide, please. So next we'll talk about 2021 first quarter results. If you can advance the slide again. Again, in the first quarter of 2021, COVID-19 certainly had an impact on our business, less so than, as we'll see in a later slide, than it did, say, in the fourth quarter, but it was still a COVID-affected quarter. And really, going back to 2020, we started to see some loosening up of some of the things that happened on COVID-19, for example, limitation on gathering. So we were able to have larger gatherings, and obviously that is a big part of our business and gathering families together as they remember their loved one that they've lost. But again, the first quarter, this was our best first quarter ever and our best quarter in general ever, where we generated $1.9 million in net income compared to about $850,000. So we're up over $1 million in net income in the first quarter alone. If we can advance to the next slide. I wanted to put this up. One, just it highlights the growth in each, what I consider each operational segment, being our California cemetery, our Utah mortuaries, and our Utah cemeteries. And while COVID-19 did have an effect in the first quarter, I think you can certainly see, especially like in the Utah cemeteries here, and to some extent in Singing Hills, the pre-need sales is really what has also been driving our growth in earnings. Our sales force has really grown a lot, and they have definitely taken advantage of the heightened awareness by the community that we really don't know when anyone's time is, and that it is a good thing to plan ahead, and that is something that you can ease your family's both mental and emotional and financial burden by pre-planning. So the first quarter where we were able to generate $1.9 million of net income, again, was a fantastic quarter for us, and something that I think we should all recognize our staff and management, because they're the ones on the front lines making it happen. Next slide, please. And if you could advance. And next, I wanted to talk a little bit about COVID-19 specifically. So looking back, at least to me, it's kind of odd how quickly you forget. But last year at this time, everyone was very uncertain. Most people were quarantining at home. There were many lockdowns where you couldn't leave your house. And that presents a lot of challenges for a cemetery and mortuary company. Number one, it limited the size of gatherings. So a lot of our revenue is going to come from hosting gatherings for families and organizing that. And when the government says you can't gather as a family, a source of revenue is certainly limited there. So a lot of the COVID-19 precautions we took created a lot of challenges for us. We certainly had to limit our size of gatherings. We decided at the outset of the pandemic that we were going to hydrostatically clean all of our locations every single week. And then any time that we had a known case of COVID-19 in our facilities, we would immediately hydrostatically clean that facility. And obviously with those passing, you had that quite often. But we felt like that was the right thing to do both for our customers, but again, for our staff's sake, they were still coming to work every single day and serving those families. And so we wanted to try to put their mind at ease as much as possible. In that same vein, we installed HEPA filters in all of our locations. They were the same filters that would be installed in a hospital. They were hospital grade. And that was a significant expense, but again, we felt like that was the right thing to do for both customer comfort and for the peace of mind of our staff. One thing we did is we limited the interaction between our staff at our different locations. We own 10 different funeral homes, and one of our strengths is the synergies that we get from being able to coordinate and share staff. But as we tried to limit those interactions so that if we did have an outbreak on our staff, it wouldn't spread throughout the organization, That created a lot of inefficiencies. And again, that created some challenges for our staff. We had a lot of staff who were regularly putting in 14, 16-hour days to make sure that families were served well. We increased our cooler capacity, or the place that we store someone's loved one, in the interim time between the time we receive them into our care and the services. And we increased that capacity in March by over 50%, because we could see kind of at least the potential effects of COVID-19 coming. And it turned out to be, unfortunately, correct that we would need that increased capacity. But that was important for us because many of our competitors did not have the cooler capacity to be able to do that. And just as a result of, and the same thing for the personal protective equipment, there was kind of a run on a lot of this equipment at the same time. So being a first mover was important in increasing our cooler capacity because lead times just got longer and longer. And then with our PPE for staff and customers, we certainly increased the amount we purchased, but also even the stuff that we would normally purchase for our central care operations, the pricing would escalate pretty quickly because, again, the community at large is now looking for masks and things that no one had ever done. And so we saw escalations sometimes 50 to 100% in cost of PPE. And then lastly, we invested in technology to allow for virtual arrangement conferences, or times when the family comes in to arrange the services for their loved one, and also virtual services. As many services were limited to 10 people or fewer, we would then broadcast or stream those services so that loved ones could attend and still have some semblance of a service for their loved one. If you could go to the next slide, please. So this slide is actually pulled from the CDC website. And for my purposes, this is only focusing on Utah only. This is not national data, this is Utah only. And this is deaths from all causes. You can see in the key up here, a red plus mark indicates an observed count above threshold, or what threshold is anything above what is considered statistically to be excess deaths. The blue number is the predicted number of deaths from all causes. The reason they call it predicted is it takes them a while. Usually they'll revise numbers for up to anywhere from 12 to 24 months after a month is closed in collecting these death certificates. But they have a pretty good idea after about, say, 60 to 90 days. And then the orange line is the upper bound threshold for what is considered excess deaths. So starting at the left here, that starts in 2017. So you can see up until 2020, we really hadn't experienced any excess deaths. But then starting in the first quarter, we did have one in the fourth quarter of 2019. The first quarter in Utah, we started to see a little excess death. But again, for those who live in Utah know that really it wasn't until the third quarter and the fourth quarter that Utah's COVID-19 cases really started to escalate. And we certainly saw that on the cemetery and mortuary side. We continue to see some elevated death count in the first quarter of 2021, but the bulk of it was in the fourth quarter of 2020. Now, looking forward for comparisons, the third and the fourth quarter will probably be the periods that, at least on the at-need side, will be the more difficult comparisons for the cemetery and mortuary side in Utah. Please advance the slide. Lastly, I wanted to kind of focus and end on kind of the why behind our results. Why have we been so successful? And if you could advance the slide. In my mind, it's because we've been customer focused. That's the frame of mind that we've used to make every single decision we've made at Memorial, is what makes the customer experience better. We haven't made it cost the biggest factor. We haven't made ease of the job on the staff. It's always been customer experience. What makes the customer experience the best? And in that vein, in 2021, we were proud to be the recipient of Best of State in Utah for our fourth year in a row. We're very proud of that. I think that reflects and is a recognition of a lot of hard work on our staff, because they really do an excellent service for our community. Next slide, please. And as we've given that great service, I think the community has recognized that. We saw that both on the profit side, but we've seen it on the market share side as well. In 2020, we increased our market share, not by raw percentage point, but on a relative basis, 8.8%, from about 14.7% to 16.1% in the Salt Lake market. And significantly, 2020 was the first time we could say that we had the #1 share in the Salt Lake market. So I think we should be proud of our company that we are offering a really great service to our community, and that as we are profitable, it is a mutually beneficial relationship with our customers and the community. And I just want to end on next slide, please. Again, returning to our growth chart, to me, that's what the last 2 slides is what makes me optimistic that we will be able to continue our future growth in the same vein that we have in the past, is because we are customer focused and we are providing a valuable service. And to me, I think as shareholders of this company, that's something that we should be very proud of, that we are offering a great service to the community. And I think our staff deserves our thanks for that, because all the funeral directors, the family service advisors, our grounds crew, they're all working extremely hard to make our community a better place. So with that, that is all the information I've prepared today. So thank you.
I spent a fair amount of time over the years trying to clean up my language. Rather than risk a public relapse, I'm going to ask Tyler to advance my slides when the time comes. So I appreciate the opportunity to be here. First of all, congratulations and welcome to our new board members. I think that's will serve us well, and we look forward to working with you in the future. Mr. Chairman, some presentations on company performance are more pleasant to prepare than others. 2020 was a record year for the mortgage company in volume funded, net worth, net income, and just about every subsidiary measurement below that. And what I'd like to do this morning is just take a minute and talk briefly about the conditions that facilitated that, what took place in the mortgage company, and a little look ahead into the future. Above all else, 2020 will be remembered as the year of COVID, and above and beyond the event itself, the massive reaction from the government in order to try and avoid a even more devastating economic consequences than we had. Thank you, Tyler. So amidst the general public global quarantines, the United States government stepped in and added massive liquidity in order to try and find some stability, both in the form of cash payments as well as massive purchases of Treasury and mortgage-backed securities. The result was the lowest interest rates in history. And so by the time we hit April and a little bit beyond, anyone who could qualify for a mortgage should have gotten at that point. And so the demand from an interest rate perspective was massive. Next slide, please. Paired with that was the role that demographic was playing at the same time. That highlighted section there are those individuals in the United States that are between the age of 25 and 34, which is the prime first-time home buyer cohort, biggest it's ever been in the history of the United States. So we had record low rates and the largest percentage of people that by age would be looking for a home. And so it was absolutely the perfect storm. Next slide, please. So regardless of how many cream puffs the pitcher is throwing over the plate, the batter still has to hit the ball out of the park and around the bases in order to take advantage of the circumstances that are there. And I'm really proud of the staff and the individuals at Security National Mortgage that in spite of the challenging physical conditions that existed because of COVID, the work from home, the demands that placed on technology in what is quite a complicated and technical process, highly regulated process to get a mortgage from beginning to end, that we were able to step up and accommodate the increased demand that came. Our mortgage salespeople, I just want to give a special shout out to Paul Christensen, who is our Executive Vice President of Production, and really has driven the growth in production over the years. We are not an internet-based company. We're not a call center. Our salespeople are boots on the ground relationship people. So all the volume that came in during that period was primarily the result of individual marketing and relationships that we built.
So that's quite a tribute. Also, the systems and processes in place had to accommodate switch from working on site to remote work at home. And we did that, I think, in my opinion, better than most of our competitors. As you looked at the results on our completion time from application to funding, while our timeframes expanded out from perhaps 25 days to maybe as high as 35, 37 days for that time period. And most of our competitors in the industry were 90 days, and in some cases, our large bank competitors were 100 and 120 days beyond. And if anyone listening had that experience, you'd have my sympathy. Next time, you'll know where to come. On the back end, the very strong relationships that we have in our Security National financial community were a key part of us being able to fund the increased demand in loans as they came. Without the support from CLIC and Security National Life, we would have had to scramble for sufficient warehouse dollars in order to maintain and continue to fund people when the demand came in. Also, the volumes would have required an extension of service times. It would not have been a good circumstance. So that synergy within the company, Security National Financial, is part of the mystique that makes us who we are and gives us a definite competitive advantage in the marketplace. Next slide, Tyler. The dramatic growth in production was also mirrored in the dramatic growth in our servicing portfolio. And as Andrew mentioned, what we have now is what we believe is a very, very high quality, long duration asset that will continue to generate returns for the company over an extended period of time. I believe that Security National exited 2020 a different company than we entered. Next slide, please. 2019 was a solid performance year for Security National Mortgage. So trying to compare that against what happened in 2020, there really is no comparison. As you can see from the performance reports there, the net income was almost 10 times what it was the prior year, which again was a good year, a very solid year for us performance-wise in the mortgage company. On the balance sheet, growth in assets was also significant. A couple of things that you really need to look further into the financial statements, which it's in there to see, are things like we have no current REO on the balance sheet. Over the last few years, we've worked very hard to clear off the mortgage company any real estate owned we've had. We don't go out and buy homes, so if they're on our balance sheet, there's not a great reason why they're there. So we were able to liquidate and eliminate all of the real estate owned properties. We have fewer non-performing and underperforming loans on our balance sheet. And our earnings base of assets in general is just much, much stronger starting in 2021 than it was at the beginning of 2020. Also noted in our public statements was a resolution that we had with the former Lehman Brothers. That was a long-standing issue, and while it would be very difficult to quantify the risk, we can definitely quantify the time and effort that it took to manage that. And we came and completed a settlement with them towards the end of 2020. It was finalized in 2021, which lifts a fairly significant, we just call it cloud, that we don't have to deal with anymore, and puts us in a much better operating position, going stronger. And that still accomplished in returning the results that you see above there. Our first quarter 2021 results, as reflected in April, were the strongest in company history as well. So that environment was created by those factors that I mentioned at the beginning, carried through into Q1. It doesn't last forever. We're finding ourselves now in a more normal operating environment. But again, I think we're positioned more strongly now than we have ever been to face those and compete and move ahead. So the mortgage business is cyclical, and 2020 was the top of the cycle. And we have been through many cycles over the past. I am confident that with the association we have, not only with the staff and skill inside the mortgage company, but also in conjunction with the Security National financial families as a whole, we will continue to prosper well into the future. And there's one last thing. So 28 years ago today, we were organized.
Today?
So today is our birthday. So congratulations.
Where's the cake, Steve? The cake.
It's a lunch.
Thank you for those reports. It does, I hope that you could sense the quality of our people, and I think that's extent through our organization. A couple of comments I would make, and I will keep my comments very brief given the time. But first of all, someone who is not here, and I thought it appropriate to honor, so if we could go to Mr. Norm Wilbur, who has been a director for 23 years and did not stand for re-election. So we had a couple of things that we were going to present to him today, but unfortunately he couldn't with us. But again, Norm's been with us 23 years. We have made up this plaque, and what this shows, if I could, let's see, there we go. When Norm joined in 1998, these show straight lines. Obviously, had I thought a little more, I would have actually made them curvilinear that they actually are. It tends to move more in a stair-step fashion. But when Norm joined, we had assets of 213 million. As he retires now, we have assets of $1,549 million. So for his 22-year tenure, we had an average growth rate in assets of 9.43%. That is the lowest number you'll see on this screen. If you look at revenue, when Norm joined us, we had revenue of 33 million, 2020, 273 million. So our revenue grew on a compounded basis for the last 22 years at 13%. Stockholders' equity, so just assets minus liabilities, gives you stockholders' equity, book value. When Norm joined us, it was 27 million in 1998. In 2020, it was 184 million, for an 11% compounded growth rate for 22 years. And to me, that represents a lot of excellence. And my thanks go to Norm. I hope that he's joined us by Zoom. We'll be sending this, which contains the same information, to Norm. And then also, I hope Norm's watching, because we have another gift. And I'm just going to show it to you, Norm, because I'm not going to open it. So you'll get a chance to see that. So again, many thanks to Norm Wilbur for his 22 years of service. I just want to make two more comments. One, again, in the note of the progression that we've made as a company. In 2015, we hit 97 million, so I'm going to call that 100 million in net equity. Assets minus liabilities, we had 100 million in 2015, so 6 years ago. We hit our next 100 million or 200 million in net equity in 2019. So it took us, 2015, it took us, 40 years? Am I doing that right? From 1965? It took us 40 years to get our first 100 million. It took us 4 years to get the next 100 million. We went. 2015 was the first 100, 2019 is the second 100 million. I should have a slide, but I'm not that well prepared. Our next 100 million, I think we will reach either this year or next. It's not a forward-looking statement.
Thank you.
And I guess it's being broadcast anyway, but because we don't give guidance, forward guidance. But if you just look at if you just project out, we'll probably reach 300 million either the end of this year or somewhere in 2022. Assuming it's 2022, it will have taken us 3 years to reach our next 100 million. So 40 for the first, 5 years for the second 100 million, and 3 years for the third, which I think gives some idea of the velocity that we are achieving. Now, some will say, well, how come that's not evidenced in the stock price? And I'd say, I don't know. I think in the financial services area, and it depends, a lot of it depends on how you characterize Security National. Is it a life insurance company? Is it financial services? Is it a mortgage bank? Is it death care? And we kind of don't fit in any of those pockets very well. But for example, financial firms simply are not being held in high esteem in the stock market. And I'm just giving facts. I mean, I was just looking, Prudential, for example, the largest insurance company in the world right now trades at 70% of book. 70% of book value. So assets minus liabilities, you got this number, in Prudential's case, I don't remember what their book value is. You know, whatever, say it's $1, they're trading at 70 cents is their stock price. Now for us, we're at 57 cents. Our book value is $13.87 a share, and we're trading, I didn't look today, but say at the $8 range, we were a little below, now we're a little above. Call it $8, that's 57% of book. If you look at Citibank, pretty well-regarded bank, pretty large, they're trading at 70% of book. So do I use that as an excuse? No, I don't. But what we can control at Security National are our operations and our results of operations and our profitability. I cannot control so much how people look at us. Now, we're trying to control it a little bit with Thane's efforts on our investor website, Thane in the rear there, but I can't control how people view our stock. I can control the results we achieve. And lastly, the final comments I would make in my president's report are that what we try to achieve at Security National is a balance, if you will. And the balance comes between long-term assets versus short-term assets, changing in market conditions. One thing I wanted to point out in Norm's slide that I neglected, but picture this in your own mind over the last 22 years, you had the dot-com bubble that burst in 2000, right? A significant adverse financial event. You had the 2008 Great Recession, whatever you want to call it, probably going 2008, 2010, very tough financial conditions. And now we have the Great Pandemic, and I don't know what you call that, the great pandemic-led recession or whatever. And yet in our company, we have negotiated those pretty well. Pretty well. In fact, we have thrived generally when times are tough. Okay, what are the challenges for Security National Life, for Security National Financial, for Security National Mortgage? It's basically this change in the financial framework against which we have to operate. For example, in 2020, probably March, well, beginning in 2008, in order to increase economic activity in the United States, the Federal Reserve, I'll call it the Federal Reserve now, undertook to purchase securities in the open market. Now, okay, what does that mean? So, geez, what does that mean? Well, if I were to go get a loan today, or starting in 2008, I would fill out my application, be approved, hopefully. Steve's kind of rugged on underwriting. Assuming I get approved, the loan is made. The loan then gets packaged into a mortgage-backed security, which traditionally has been bought by pension funds, life insurance companies, other long-term type investors. Today, that mortgage-backed security is purchased by the Federal Reserve. By the Federal Reserve. So what did that do? Why did they do that? Well, it's simply supply and demand. The Federal Reserve was pushing more money into the system, which pushes down interest rates. As you increase the supply of money, because you're buying these bonds, you are creating a demand for those bonds, which then pushes down the interest rates. And that's why we see historically low rates. Okay, fair enough. That worked really well in 2020 for our mortgage company, right? Refinance rates were high. The problem that keeps me awake many times at night is on the reserves, on the Fed's balance sheet, which nobody really knows. At this point, there are $8 trillion, it's estimated, of mortgage-backed securities. Now, the entire mortgage market in the United States, the entire mortgage market is estimated to be 11 trillion. So the Fed is holding, round numbers, 75% of all the mortgage-backed debt in the United States. At some point, they say they will be selling that back into the system. Well, that's a huge, two things are going to happen. Number one, they're not buying. At that point, they will stop buying. And at that point, they will be selling. So you can expect, one would expect at that point, rates to go up. Well, how do we as a company manage those risks, or whatever risk there is that rates would go up? And that's balance. And so we try to keep a balance. That's where our mortgage, our MSRs, our mortgage servicing rights, that's where they become a more valuable asset. For sure, our bond portfolio will become a less valuable asset at that point. Our real estate assets, we believe, become a more valuable asset over time. So that's the balance that we have been trying, that I hope I've been able to sense, but explicitly I wanted to point that out. That's the balance that we try to achieve in different financial markets and trying to anticipate different circumstances in the future. But that nevertheless is also a risk. And I think that's why you see Prudential trading at, what did I say they were trading at? 70%, cities at 75%, we're at 58%. But we are very cognizant of those risks, and we take very deliberate steps trying to hedge those risks. And we'll see. We'll see. But we've done pretty good so far with about a, what was it, 13% return on 13% growth of owner's equity over the last 22 years. With that, are there any questions? That will conclude my report. Are there any questions? We'll open the meeting for questions. Seeing none, we'll now ask for a report from the attendance and balloting committee, Mr. Richard Dahl.
Mr. Chairman, all of the nominees for the Board of Directors of Security National Financial Corporation have been elected by a majority of stockholders represented either in person at this meeting or by proxy for both Class A and Class C outstanding common stock. The proposal to approve on an advisory basis the compensation paid to the company's named executive officers has been approved by a majority of stockholders represented either in person at this meeting or by proxy for both Class A and Class C common stock. The proposal to ratify the appointment of Deloitte & Touche LLP as the company's independent registered public accountants for the fiscal year ended December 31st, 2021 has been approved by a majority of stockholders represented either in person at this meeting or by proxy for both Class A and Class C common stock.
Thank you, Mr. Dahl. And we also thank the attendant, the Committee on Attendance and Balloting. I will say we don't, I don't know that we have the final complete numbers, which is why we don't announce those. But I mean, the margins are like 90%, 90 some odd percent. However, a particular point of compliment to our new directors and frustration for myself is I am told, at least as of 2 days ago, that both Ms. Mysore and Ms. Love were more popular than I was, which is
Mr. Chairman, no change on that.
You could have held that comment. Thank you. Chair will now, but thank you. And I think it shows, on a more serious note, though, as our company tries to adjust to the market conditions that we find ourselves in, I think we are just more than pleased and I want to express our appreciation of your willingness to serve. Thank you. The chair will now entertain a motion as to the approval of the actions of the board of directors and the management of the company taken since the last annual meeting.
I, Andrew Quist, a stockholder of record, move that the actions of the board of directors and the management of the company taken since the last annual meeting be adopted and ratified.
Second that.
We have a motion, we have a second, that the actions of the management of the board of directors taken since the last annual meeting be approved, be adopted and ratified. We'll now vote on that motion. All those in favor signify by saying aye.
Aye.
Any opposed? Motion carries. The chair will now accept a motion to adjourn.
Mr. Chairman, as a stockholder of record, I move that this annual meeting of the stockholders be adjourned.
I second that.
I have a motion, I have a second that this annual meeting of the stockholders be adjourned. All in favor signify by saying aye.
Aye.
Opposed, nay. Motion carried. The meeting stands adjourned. Thank you for your attendance.